Welcome. In this video, when will Xcn coin start an uptrend? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. In the chart, it is evident that the price has been making consecutively lower lows and lower highs amid a prolonged downward movement. This structure is a classic characteristic of a downtrend, reflecting a market environment where sellers dominate and buyers remain weak. However, just as every trend has a beginning, it also has an end. Downtrends eventually exhaust themselves and give way to a search for a new direction. At this point, one of the key trend reversal signals in technical analysis, the formation of higher lows and higher highs, gains significant importance. The breakdown of the existing downtrend structure and the formation of a higher low, followed by a higher high, is a strong signal that the market may be preparing to reverse upward. This reversal formation can be an exciting development for investors. During a downtrend, investors tend to sell at each rally, but once a pattern of higher lows and higher highs begins to form, this mindset starts to shift. Now, as prices decline, investors begin to look for buying opportunities. This shift injects new momentum into the market, and as buying pressure increases, the likelihood of a trend reversal becomes more pronounced. Especially in the phase of lower lows and lower highs, the general market sentiment is negative and cautious. But when this structure begins to break, specifically when the price forms a new low that remains above the previous low, it indicates that the downward momentum is gradually weakening. More importantly, if buying pressure from this higher low is strong enough to push the price above the previous high, then not only has a higher low been formed, but a higher high as well. This dual structure is one of the fundamental formations in technical analysis that signals the beginning of an uptrend. Higher lows suggest that investors are no longer waiting for previous low levels to buy, indicating increased risk appetite. This contributes to upward price movement. On the other hand, higher highs signal that buyers are starting to dominate the market, with each new wave of upward movement ending at a higher level than the last. This serves as another strong confirmation of an upward trend. At this point, one key detail to consider is the timing factor. Trend reversals typically don't begin with sudden and obvious movements, but rather with more subtle and gradual transitions. The first higher low might go unnoticed, as many investors still assume the downtrend will continue. However, the higher high that follows begins to shift market perception. More investors start recognizing the potential reversal and begin to reassess their positions. This leads to increased volume, stronger momentum, and more robust upward price movements. Additionally, at the levels where this structure forms, psychological resistances also start to break down. Investors begin to shed their fear of a further drop and shift toward a "don't miss the opportunity" mindset. This leads to increased momentum in the market. This rapid psychological transformation supports the technical upward movement of prices. Formations where investor psychology and technical analysis align offer unique opportunities to understand market direction changes. In conclusion, if the structure of lower lows and lower highs comes to an end, and the price forms a higher low followed by a higher high, this can be seen not only as a technical signal, but also as a sign of a shift in sentiment, a change in market perception, and the beginning of a new uptrend. Such patterns have historically preceded major upward movements. If this structure forms successfully, and the price continues in that direction, a door to new opportunities may open for investors. With the support of indicators and structural analysis, a new upward trend could begin with strong momentum. But we can't base our analysis on this alone. Let's now look at other metrics as well. Stay tuned. When analyzing the chart, one of the most notable structural formations is the ascending triangle pattern, which can be clearly observed. This formation stands out as a strong technical structure that indicates the market's willingness to move upward, with buyers gradually taking positions at higher levels. The key characteristic of the ascending triangle is that the price forms higher lows on each pullback, while repeatedly testing a clearly defined resistance level at the top. This indicates that buyers are becoming increasingly aggressive, while sellers continue to hold their ground at a certain level. However, this pressure eventually leads to an imbalance, and the price breaks out upward, initiating a new bullish wave. In the scenario we are examining, a small but meaningful ascending triangle pattern has formed. When analyzing the price movements, it is clear that the lower trend line is being supported by consistently higher lows. This shows strong buying interest in the market, with more investors stepping in at each pullback. At the upper boundary, there was a specific resistance zone that the price touched multiple times. With each touch, the resulting pullbacks became weaker, while the lows continued to rise. This tightening range indicates that the price is building energy and preparing for a breakout. Indeed, the price has successfully broken above the upper boundary of this ascending triangle. This breakout is considered a very positive signal in technical analysis because such formations often precede strong upward moves. The breakout from the ascending triangle indicates that the buying power in the market has now gained enough momentum to overcome the resistance zone. From this point on, the behavior of market participants changes. Buyers who were previously cautious due to the resistance become more confident in entering the market. At the same time, short sellers who had positioned for a decline are forced to cover their positions as the price breaks upward, adding extra buying pressure. Currently, the price has entered a classic technical retest phase following the breakout, which is a very healthy development. By testing the previously broken resistance level and confirming it as a new support, the uptrend gains a more solid foundation. Such retest movements indicate that the price respects technical levels, and that institutional investors are also paying attention to these key areas. If buying pressure re-emerges during the retest phase and the price resumes its upward movement, this confirms the breakout. This could mark the beginning of a new upward wave heading toward the target of the ascending triangle formation. In technical analysis, the target in such triangle patterns is usually calculated by projecting the height of the base upward from the breakout point. In the current setup, the height from the lower boundary to the upper resistance provides an estimate of how high the price might reach in the near future. Of course, for this potential move to materialize, the retest must be successful, and buyers need to regain strength at that level. However, based on the current structure, the market seems well positioned for this scenario. Especially in the case of small triangle formations like this one, significant price movements can follow. These tight consolidations are essentially a sign that the price is searching for direction. Once the uncertainty ends and the direction becomes clear, a new market balance is established. If that balance shifts upward, previously hesitant investors also enter the market, accelerating the price momentum. Additionally, volume data typically increases during such breakouts, which indicates that the move is genuine and supported by strong participation, not a false breakout. The MACD indicator is a powerful tool that traders often use to observe trend reversals and momentum shifts in technical analysis in the most effective way. On the current chart, the MACD's intersection in the lower zone and its subsequent rise above the zero level stands out as a very positive and remarkable technical signal. This development shows that the bullish trend in the market structure is gaining strength and momentum is now turning in favor of buyers. In the current scenario we are examining, the MACD line has broken the signal line upwards by making a strong upside cross in the lower region. This is an important development in technical analysis called a bullish crossover, which usually triggers a bullish breakout in prices. Such crossovers can often be a harbinger of short, medium, and even long-term price rises. The fact that this crossover occurred just below the zero level suggests that the upside potential may be even more significant. MAC crossovers should be followed. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.